This session will focus primarily on climate, and we look at green growth and green finance. We have some very interesting speakers, the panelists here. There's a great mix of Teresa from the IMF, who will provide us with a view that is truly global. We also have a practitioner on the ground, Siddhant, who will share with us some of the pains and the pressure points of being on the ground and experiencing some of this work firsthand. And then, of course, there is Rinchin, who is able to bring in the private sector perspective, a global perspective. So before I begin, what I thought I would do is set the context a little bit. I will then ask the panelists to introduce themselves, and we'll then do 2 rounds of questions. And we will then open up to the floor for comments, questions. We have an hour before us, and I think we should be able to manage in that time. Since the morning, one of the things we've been hearing about really is South Asia's extreme vulnerability. And this is something that's been long apparent. We've done a lot of analysis on this from the World Bank's perspective. We know that more than half of all South Asians, which is about 750 million people, have been affected by one or more climate-related disasters in the last 2 decades. And I think the scale of climate change, the challenge that's facing South Asia is immense. We're all experiencing it. We are living through it. As temperatures increase, the region is experiencing what is called a new climate normal. We can see the weather's becoming hotter. The monsoons are becoming longer. We have increased droughts. We heard in the morning about the glaciers. So in the Karakoram, Hindu Kush, Himalaya range, there are more than 25,000 glaciers. These are now, we know that these are fast retreating. These provide energy and water to over 1.9 billion people. So that's the level of population that's being affected by these. We also know from our research that these changing weather patterns are expected to impact about 800 million people by 2050. And this could cause between a 10 to 15% decline in crop yields. So that's the kind of level of estimation we have. And altogether, there are some World Bank estimates that suggest that climate change could actually push about 62 million South Asians below the poverty line by the year 2030. So even as we discuss these broader issues in terms of what we want to do going forward, I think it's important to keep in mind the numbers, the people, the magnitude that we are talking about. The other thing I think that came out very clearly this morning was also that this is a regional challenge, and we heard from Cecile in the morning about the importance of coming together as a region to deal with some of these issues. That a regional approach allows us to be smarter, to be faster, to share knowledge, to share experiences, and also to pool funds and to be more efficient in the ways that we deal with some of these issues. I'll give you one example, which is the one that was quoted in the morning as well, air pollution. That's something a lot of us are experiencing. I live in New Delhi, so I can tell you that it's something that's at the top of our minds at least. We know from our research that about 30% of air pollution for a city actually comes from a neighboring city or a neighboring state or a neighboring country. In Kathmandu, for example, about 15% of the air pollution is from other countries. In the Terai region of Nepal, that's as much as 50%. It could be in some months, it's about 50% that comes from other neighboring countries. So what we are really looking at is a challenge that's at the country level, but also at a regional level. The session after that, my colleague is going to talk a little bit about the World Bank's approach in terms of a new approach that we introduced in the year 2021, which is called the GRID approach in terms of how we deal with these issues, which is green, resilient, and inclusive development. So I'm not going to take away from that session, but just to say that from the World Bank's perspective, when we look at some of these issues, we are trying to see how we can promote economic growth that goes hand in hand with environmental goals and inclusion. So today, I think as we take forward our session, what we are really looking at is how we can deliver climate action across South Asia, which will require bringing all the partners together, which will green the financial sector, which will lead to scaling up of public and private finance, and which will translate strategies into real-time investment plans. I think that's where we are at. The government cannot go at it alone. It's clear that more needs to be done. We have several numbers. Just before the session, we were discussing, all of us were discussing this panel, and we were talking about, there are many numbers that are going around, and I think, Teresa, you're the one we will turn to for some of those numbers in terms of what's the financing gap, what's the need. There are trillions and billions that we talk about. But also, I think, at a very fundamental level, what we heard in some of the earlier sessions was what people are doing are doing at their level. So for instance, Penguin India spoke a lot about how they are trying to green their production and supply chains. We had a very interesting session on tourism where we heard how, we had the Abbotsford experience where a small estate is trying to be as sustainable as it can. We heard about how luxury experiences are trying to be sustainable. So now I think we are now moving forward to talk a little bit about some of these macro issues. We're talking about how countries can come together, and also I think to hear from our practitioners on what are the real issues that they face on the ground. So let me begin by asking our panelists to introduce themselves, and then we will begin our round of question answers. So Rinchin, may I ask you to introduce yourself and a little bit about your background, please?
Thank you. I think everyone can hear me. So yeah, I'm Rinchin. Good afternoon, everyone. I work for Robeco, which is an investment management organization headquartered in Rotterdam in the Netherlands. So for the past 12 years, I've been in the investment management industry. And so what we do at Robeco is we focus very much on creating investment products in global equity and global credit markets that are designed to not only deliver financial returns, but also deliver impact from a sustainable, from an environmental and from a social perspective. So I'm looking forward to discussing that with my fellow panelists.
Good afternoon, everybody. I'm Siddhant Pandey, and I run an international private equity fund called Business Oxygen. My remit in the fund is to do transformational change in the SMEs by making them pivot to climate-smart approaches and ESG measures. And that's a tall order in Nepal. So I've been doing this for about 8 years now, and there's so much more to do, and we've just started to scratch the surface.
Hello, good afternoon. I am Teresa Davan Sanchez. I'm the IMF resident representative to Nepal. I have been working at the fund for almost 20 years. In this capacity before in countries like Pakistan or Armenia, and before traveling all over the world. I mean, I'm not an expert on climate issues, but I'm very happy to be here and to bring what IMF is doing on this area that I think is very important. I'm very happy to contribute today to this discussion. Thank you.
Thank you. So Teresa, I'm going to begin with you and ask you to set the broader context for how the countries of South Asia, how the Himalayan countries can come together, can leverage cooperation and support green growth and the achievement of their sustainable development goals through working together. So I'll ask you to frame the context for us, please, a little bit.
Okay, no, this is a very good question. But the first thing to kind of frame the discussion, probably we'll discuss this morning, is the importance of the South Asian region in the world right now. We look at the IMF from that very high-level perspective. It's contributing 70% to growth right now in the world, in a world that is not growing too much. No? So we want South Asia to continue growing very strongly. But the problem is that South Asia, as a region, is also one of the regions that contribute the most to carbon emission, unfortunately. No country like Nepal, no, because it's small and it's a certain type of economy, but we know that we have some other major contributors. So that implied that to grow on a green basis. And for that, climate change and climate issues are going beyond borders, that we know that. So collective actions, coordination, cooperation is essential. I mean, and there are many other people in the audience more experienced than me to talk about that, but from the IMF perspective, the point is about the concern now is about geoeconomics. Geoeconomics is a major concern and a major obstacle to grow in general, not only to grow green. What that means, geoeconomics? I mean, we see that in the newspaper every day. The U.S. is in good terms with China. We have, unfortunately, the Russian invasion in Ukraine, increasing in prices. Countries are turning into protectionism to protect their countries, to kind of have energy safety or energy security, restriction on exporting, import restriction. We had that here also in Nepal recently. This is a major concern because at the end of the day, to grow and to grow green, what you need in countries in which governments has limitation because the debt level of government is relatively low, you need to attract private sector. We need the private sector to come. To come, they need to have a kind of condition in which this type of barriers are not operating, in which we can have, for instance, a network of hydropower production and transmission lines in which the investor could be Chinese, the transmission line could be Indian, and the consumer can be Bangladeshi. These type of things are very important. I think it's a very important point that I wanted to make. And only two other points very quickly. Coordination also in terms of taxation. I think that was mentioned before. It's important that countries, when they put together their taxation, carbon pricing in place, they look at what their neighbors are doing, because otherwise we know that factories just move quickly from one region to another, and at the end there is not a reduction in emission. And the final point, that also for the private sector that I would like to hear from them, is about the potential of developing in South Asia that is already working in some countries, the idea of trading a carbon credit among countries, meaning that countries that are polluting a lot or companies that are polluting a lot, why not to kind of get a trading with countries that are polluting very little, like Nepal, for instance. There would be a mutual benefit for that. But we need statistics, taxonomies, we need standardization in procedures. We need to make sure that this compensation is happening and is effective. I end up here, and then hopefully to contribute to the discussion later. Thank you.
Thanks, Teresa. I think indeed the geopolitics, the geonomics, the operating environment is indeed very important as far as our work is concerned when we look at transboundary cooperation. So indeed, that's an important point. Harmonization, standardization in several areas. I think that's important. Siddhant, if I may turn to you now, and I think you are best placed to share with us what's happening on the ground. Where do you see the opportunities? Where are the barriers? What is really the experience when we talk about promoting green growth in Nepal, in South Asia? So if you could share some of those experiences with us.
I'm going to start with Nepal because we are really behind the curve when it comes to green financing. The lack of coherent policies that support green objectives is totally not there. India has made enormous head start on this. Bangladesh as well has done enormously well in the past few years. Just in January, India just issued $980 million worth of green bonds towards sustainable financing. And that is something that we can learn from. And we have started to finally, in September, we came up with a draft of the green bond facilitation by the Security Exchange Board of Nepal. But in Nepal, you see, the question here from the ground, my experience running an SME fund with a climate approach, is that there is a cost to that pivot. That transformational change is not cheap. There are very few bankable green projects available on the ground in Nepal. There are lending barriers, there are asset liability mismatch, and there really aren't that many financial instruments that one can deploy. But recently what's happened is that, not from policy level, but from a one-off ad hoc basis, we've been able to introduce blended finance. We've been able to deploy subordinated debt instruments. For economies like this, which have volatile foreign exchange, it could be the way forward. Now, looking at Nepal, as back as 1968, the Agriculture Development Bank had green financing as debt, okay? In 2008, Nepal was the first country under the Scalable Renewable Energy program under Climate Investment Fund's PPCR project. It's $30 million. And it was through the Alternative Investment Energy Promotion that the World Bank deployed that fund. And it was hugely, highly successful. But since then and now, where have we fallen behind? The whole focus towards green investments has actually dwindled. But again, the world is changing. They're not looking at grants. They're not looking at, the world is looking for innovative financial instruments. Now, we need to start thinking along those lines to be able to attract the green bonds. And if you look at Nepal, we have not been able to attract any green bonds. And that's because we do not have actually a tangible bond market. We do not have a yield curve. We do not have a country rating. Now, you can't have, it's like to have facilitation for green bonds is like putting the cart before the horse. So, there is awareness that we have to do something, but it hasn't quite dawned on our stalwarts in Singapore that we need to start actually really soliciting for that pool of $1 trillion that was issued by various multilaterals, various corporations that we can tap into. So far, the DFIs, like the World Bank, IFC, and the others, European DFIs, have the risk appetite to invest in Nepal. And we should look into the blended finance mechanism to de-risk the corporates' investments. And that is what we're doing. But, awareness is very important. You need to try and convince corporations that making that pivot is also going to help their bottom line. So the realization now is that unless it makes commercial sense, we are not going to be successful in any sort of green transformation.
Thank you, Siddhant. But then I'm going to ask you a follow-up question before I move to Rinchin, because you're saying that we have to convince corporations that this is important. We have to find ways of making this, commercial. What could we do? What are the few things that we could do? Is it learning from other experiences? Is there? What could it be on the ground?
Well, I'll give you some examples of what we're doing. We have a company that we've invested in. It's called Simple Energy. It does renewable energy services. It's like a mini utility company that provides solar solutions to corporations and rooftop solutions as well. So we've made the largest rooftop installation in Nepal of 500 kilowatts, which is half a megawatt, on top of a brewery that produces Budweiser beer. Now what happens here is that the brewery is saving on its energy because the price that it pays from its operation from the solar installation is cheaper than buying grid electricity. But it is not a standalone. It is 30% solar, 70% grid electricity, but they do not need any diesel or petrol generators for backup. So now that sort of solution was something that we had to convince them and show them that this is the X amount of rupees that they will benefit annually, and they were sold because it's not pittance. It's at least lakhs and lakhs of rupees that they save. So this is taking traction. We've got so far almost 4.5 megawatts of installation, but there are barriers because The government doesn't allow us to have more than a megawatt of installation on any one industry. So we have to work under that. And then there are problems with net metering, etc. But these are incoherent policies that do not support renewable energy proliferation.
Thank you very much. Rinchin, if I may turn to you, I think you bring in a unique global perspective from the private sector, but also are very familiar with the South Asian context. So perhaps you could tell us a little bit in terms of what are the risks, what are the trade-offs that are associated with pursuing a green growth approach? How can some of these be managed? What are the things that a country should keep in mind when it's pursuing this approach?
Sure, thank you. Yeah, so I guess, I'd like to kind of reframe this a little bit, because why is this important? I think we all know that, there's a lot of different environmental catastrophes, wave after wave, whether it's climate change, whether it's biodiversity, whether it's risks regarding air pollutants and water scarcity, etc. So as investors, we need to bear in mind all of these risks that could impact the value of the assets in which we invest. So for us, it's critical because we have a duty to our clients, a fiduciary duty to ensure that their capital is being well looked after and that we're taking into consideration all possible factors that could impact those returns into the future. And so in terms of this region, this is the most critical region, arguably. So if you think about that, 45% of global greenhouse gas emissions come from Asia. And 80% of all future fossil fuel demand is coming from Asia. All the growth, as Teresa mentioned in her opening remarks, is based out of this region as we speak. And of course, in Nepal, we're surrounded by the two most populous countries in the world. Populations on average are much younger as well in Asia. So this is a very critical region, and the comments that Siddhant put forward are regarding the challenges of policy in terms of attracting the capital that's required. Nepal's not alone. Everybody is facing this huge challenge for the very first time together, and we can all learn from each other in terms of how to overcome some of these difficulties. The numbers are huge, they're staggering. So if you look at estimates on a global level, talking now specifically about climate change, we are faced with a challenge of facilitating an energy transition from one based on fossil fuels to one based on renewable energy at a scale and at a pace that has never been seen before. Never have we transitioned from one source of energy to another in such a short space of time. And this is what we need to do to avert all of the risks in relation to climate change. Already, global temperatures are 1.5 degrees higher than pre-industrial levels. And just to bring that home, it's a lot, because if temperatures rise another 1 to 2 degrees, we're talking about 3-4 degrees above pre-industrial levels. Imagine sitting here and the temperature goes from 25 degrees to 29 degrees. I think everybody, including myself, will be taking our jackets off and probably will need a bit more water on the tables. So that at a global scale is very significant and has a lot of systemic risks. It has a lot of trade-offs and risks with regards to tipping points and things that the scientists have been warning us about for a very long time now. So the question, really, the risk that I see, there are manifold risks, but the risk that I see as a person from the finance industry is, are we going to be able to deploy enough money fast enough to ensure that this transition takes place? So going back to the numbers, I think at a global level, I read in some third-party research that there's close to 10 trillion in annual investment required to facilitate the transition across the energy sector, transport, infrastructure, buildings, to get from where we currently stand in terms of global annual emissions to a net zero scenario by 2050. We have to, first of all, reduce current global emissions by 45% by 2030. 2030 is just around the corner. Sorry, that's from 2010 levels, but still, we haven't really gone down from 2010 levels. If I'm not mistaken, we might have gone up a little bit. So that's a huge, huge ask. So the question and the risk that I see is, are we going to be able to deploy this money? So to answer that question, we have to think, how much money are we talking about? Within the region, if I'm not mistaken, in Teresa's recent report from the IMF, $1 trillion of annual investment is required into these sectors. Currently, about 200 billion is being deployed. So the gap is huge, right? 800 billion. And so that answers kind of the question, at least within this region, of how much. Then there's the question of who pays, right? And then finally, the question is, how do we ensure that all the stakeholders who are impacted, which is literally everyone, not just in this room, but outside this hotel and everywhere else in this region, how do we ensure that everybody is taken into consideration and that this transition is executed in a fair and inclusive way? So those are the big risks, in my opinion, and I think maybe I can hand it back to the moderator, because I think others can also help unpack those.
Yep, absolutely. I think this is, it's really an important question, and we did discuss this a little bit in terms of how this energy transition can be a just transition. And I think perhaps we can hear more from the speakers about this also. But let me turn again to Teresa. And Teresa, ask you to share with us some of the global trends that you see in terms of green finance, and how do these compare to what's happening in South Asia at the moment, what's IMF's latest thinking on climate finance. Rinchen already quoted some of the numbers, but it would be good to hear a little more on where you're coming out, how you're supporting the region in terms of green finance.
Sure. I mean, for the IMF, climate change has become a priority, as everybody else, no? I mean, we usually work with countries that have balance of payment problems, but right now the priority is climate change as well, more long-term. What we do to support these efforts, first of all, a lot of analytical work. I think that some of them was mentioned here. I haven't mentioned that. We just issued a paper, is in the website. I would recommend everybody to read. Probably some of my colleagues from the World Bank, they already know it. The title is Unlocking Climate Finance in South Asia. So it was issued last week, so it came in very timely for this event. And it's a very good kind of snapshot of what is going on in the region, and what are the policy advice and the different role of not only IMF, but also governments to support the effort. No? And then, the numbers, as they were mentioned before, no? So there is a calculation that is very complicated to calculate, no? How we know that, but it's big, no? 1 trillion of US dollar annually need in investment in mitigation and adaptation. Because some investment is already taking place, because countries are already moving ahead. The financing gap is around 800. The 800 billion, no, is like numbers that are giving me even a little bit of vertigo sometimes when I think about that, no? 600 in regards mitigation, 200 billion regard adaptation, no? And then adaptation is something that is considered more like a public good, and it's something that there is an expectation that governments will do, and because it has a kind of public good type of dimension. But mitigation is something that could be also done by governments, no? But it's very attractive to private sector participation, no? And this is where the problems come, no? How countries could become attractive to investors in the world that are ready to invest, and even not having a return as high as in other alternative investment, because they care about the environment. Now, this is very interesting, no? How to attract these people that are ready to invest in that type of purpose. So to help countries to get attractive and to that type of investment, because as I said before, private sector is fundamental, because governments are, most of them, in the world, also in South Asia, quite stretched as regard the debt level. No, increasing the public debt is not a solution. So first of all, what we do with countries, a lot of policy advice individually, meaning try to make sure that when they put together the climate strategy, the national plans, that this is consistent with the resources and with their capacity. And in that sense, the IMF is doing a lot of technical assistance in cooperation with other IFIs, like the World Bank, no, to make sure that the budget reflects well these projects, that are well financed, no, that we have proper statistics about the impact, that we have proper statistics about how to reflect all of these new investments, and that also climate change developments in the GDP, in the national accounts, no, because this is going to have positive and negative impact. It's very tricky and time-consuming. Financial sector, of course, this is one of the main areas of the IMF, how we make sure the central banks have proper supervision and macroprudential tools to make sure that banks have the capacity of have a right taxonomy for the investment and to allow private sector to come. And then this opened the door for standardization in procedure, disclosure, transparency. Private sectors are going to ask where my money goes. Is go really to improve the environment? If not, I'm not investing. So all of this we are working and with different countries. And then finally, on the financing. No, financing is needed. Money is needed. So the IMF is also putting some money on the table. And this is about a new facility that was put together after COVID. It's called the Resilient Sustainability Trust. This is a very interesting mechanism. No? You remember during the COVID, the IMF gave a lot of SDR allocation to different countries. I mean, basically, it was like a printing money, no? And Nepal, for instance, got $250 million. Some other countries get big amount. The advanced countries, they got all of this allocation, and they didn't need that money, no? This their allocation. So advanced countries, they put together this money that they received from the IMF in a fund, in a trust. It's called the Resilient Sustainability Trust. For countries, low-income countries or developing countries, they can borrow from that fund. No? It's very interesting. It's 20 years maturity, the loan, with I think 10 years of grace period, and the money has to be used for reforms and structural reforms, and mostly related to climate. So it's a very good facility. And that in some countries, the allocation is according to the country's size and other type of criteria. So some countries, for instance, Nepal, will not get an excessive amount of resources, maybe because Nepal is small, but it's a catalyzer. And this is very important, no? So working with the fund in this type of facilities, and also the World Bank or other type of IFIs, we have the capacity to catalyze others to come, because it provides some comfort. We help to reduce the macro premium that private sector needs. No, like we are here helping countries, and there will be mechanisms to avoid exchange rate crisis, for instance, or fiscal crisis. No, so that provide comfort to investors. So I think this is a very good facility. A lot of countries have already applied for that. Rwanda, Cameroon, Costa Rica, Barbados, etc. In Asia, only Bangladesh. Only Bangladesh. No, we are trying to, and I'm using this as a kind of commercial to talk about this facility, because I think it's a very good initiative, and that countries could benefit to kind of unlock, no, the finance that's needed for climate change. And I stop here. Thank you.
Thank you very much. I know the World Bank is doing a lot in this space as well, but I think the next session will get into further details about that, so I'm not going to take away from that. Siddhant, let me turn to you now, and I think we've heard what the institutions are doing. We've heard that whatever is being done is not enough. We've heard a little bit about the gaps that exist in terms of the funding gap. Not little is the wrong word to use with that. But I think where you come in is that you're able to share with us some concrete examples, right? In terms of where things have worked, where things have not worked, what are the lessons, what are the experiences from the ground. So perhaps you could now share some of that with us.
First of all, it's really good to hear that the IMF is going beyond monetary policy to green policy. Thank you, Teresa. You know, when we talk about financing and investments, especially when we're talking about sustainable investments, it's not just about risk capital. It is about the technical know-how, the sharing of knowledge, capacity building. So when we do approach a company, an SME, when we are investing in it, we have a four-pronged approach to it. One is resource efficiency. The other is ensuring production and productivity are salient, use salient practices. Third is physical assets are not compromised and they're protected. And fourth is access to finance. Of course, access to finance is very important because without that, no company can survive. Now, when my experience dealing with renewable energy companies in Nepal, we have done a couple of startups, and one is basically the largest biopellet producing, industrial level biopellet producing company. It is in Madhya Pradesh. Industrial level, still 20,000 tons is the capacity. We would like to see more of it. We'd like to replicate that in every other provinces. But let me just walk you through the problems that we faced earlier, okay? Green coal, biopellets are called green coal. It's a substitute for the coal that we import from South Africa, Indonesia, and India. Very expensive. If we can displace even 30% of that, then it would make enormous, it would help the environment in reducing greenhouse gas emissions. We are working towards that. We're lobbying the government to mandate the industrial complexes that use coal to at least have 30% of pellets in their mix. That would change the sulfur emission by almost 40% in the atmosphere. I mean, that is a start. The other thing is that there's enormous demand for these biopellets from India as well. But then we realized that when we wanted to export it, there was an export duty of 200% slapped on it. And this is made from waste of plywood, waste from forest waste, perennial waste from the forest. But we couldn't understand why there was a 200% export duty when plywood has a 0% export duty. Okay? So we raised this question, everyone was baffled, you know. I mean, it was a cut and paste legislation that on a tax regulation that was put there, had never been revised because this was an innovative product. So, you know, this is a case of how regulation should follow innovation, but innovation in Nepal has been following regulation and stifles innovation. So finally, with a lot of lobbying, we did finally manage to get it down to 10%. So sarcastically, I mentioned in a government meeting that I guess the jump from 200 to 0 was too much in one go. So perhaps next time we will have 0%, and we're working on that. And you know, it is extremely, the company is doing extremely well. The Finnish company Argonaut is our technical assistance partner in this biopellet company, and we will see that we would like to replicate this in other provinces. Now, on the other side, working with a biogas plant that also makes biofertilizers, we had huge expectations, but the government's fossil fuel subsidy, the government's taxes on CNG and biogas, and import of these LPG was much cheaper than producing biogas. So it was not competitive. So it is struggling. So, you know, in order to invest in renewable energy, you need to ensure that there are certain level playing fields. You cannot continue to, I'm not saying create subsidies. If you're going to give subsidy to one industry, you might as well give it to the other. But, you know, let there not be any subsidies at all and let the market decide. But that's not happening because when you produce CNG, you cannot slap an import tax on it for your revenue enhancement. So there was no interest there. So it's a pity because there could have been a lot of demand there, and there would have been import substitution of LPG as well. but that doesn't look like it's happening. Now, on the solar side, when they continue to keep on revising the prices of the solar PPA, that really becomes very difficult for an investor to rely on, you see. And that's why we kind of wonder how we're going to reach net zero by 2040, I think, if there's been nothing done on the side on the ground to enable that pivot. Now, the private sector, there are certain areas. I mean, one of the greatest successes of Nepal, I say, is the PPP between the private sector and the government in installation of hydropower projects and the transmission line. If the same sort of energy and focus were given to other renewable energy sectors, then we would really be way ahead in the region by now. But that is not happening. We are advocating, we're lobbying for a energy mix so that solar can also be a part of that, that equation, so that we don't have to rely on hydropower and hydropower alone. So these are the problems on the ground, but you know, we're in a much better place than we were 7, 8 years ago when we started, and I hope that we will be even in a better place tomorrow. Thank you.
Absolutely. And I think part of it is also bringing out some of these examples, talking about them, being able to share these experiences. And it was interesting when you spoke about the pellets, because we see this in South Asia increasingly. There are opportunities for countries to trade, for countries to connect, but often it just takes a little bit of unblocking of some of these policies and regulations. Rinchin, can I turn to you now and ask you to talk a little bit about how ESG, environment and social and governance standards, how these can be, how companies, how financial institutions can factor these more into their decision-making process, how we can, how the private sector can take this forward.
Yeah,
so
absolutely.
If you can share that.
Thank you.
Thanks.
And thanks as well, Siddhant. Your examples I think are so important for people to understand, right? Because at the ground level, we need to know, what are the challenges? Why is it that environmental technologies are not gaining traction against, let's say, LNG or whatever the equivalent fossil fuel or dirty existing incumbent technology is. And I think that comes again back to this question about financing. The fact of the matter is that for environmental technologies to become competitive against incumbent technologies upon which our global economies rely, you need a huge amount of upfront financing in order to be able to bring the new technologies down the cost curve. Think about electric vehicles. Think about how expensive an EV was only 20 years ago, but the amount of capital that was deployed into the EV industry, both in places like the US, with the help of government subsidies, and with the help of deep institutional capital markets, from which capital was able to be mobilized, and also from the likes of China, where government had provided huge amount of subsidies to the EV battery industry to be able to make the cost of an EV battery competitive with the cost, an EV battery vehicle competitive with the cost of an ICE, internal combustion engine vehicle. So it doesn't just happen that we can switch from what we've been doing for such a long time to like some completely zero emissions type technologies without there being a huge amount of upfront funding. And I think this is probably part of the complicated methodology that our friends at the IMF have been working out to be able to estimate those big numbers. So it brings us to the question of like who pays, right? So even if you actually put together like all of the balance sheets of all of the development finance institutions in the world, as well as governments, if you think about where national balance sheets currently sit, there actually isn't enough money to completely close the funding gap, and let alone risk appetite, right? And people can't just say, yeah, sure, we'll go and finance these environmental technologies that are not actually proven in the hope that they'll come down and the cost curves will, be competitive against the traditional technologies within a really short space of time. We have no idea. So there's a lot of risks around that. So that's where private capital is really important, because pools of private capital globally are really, really deep. I think in terms of institutionally managed assets globally, it's like close to $150 trillion. And going to your question about ESG and the significance and importance of ESG and actually harnessing ESG to be able to help bridge some of these funding gaps, there was an estimate in Bloomberg that by I think by 2025, which is obviously just around the corner now, 1/3 of global institutional assets under management, which is basically $50 trillion, will be in so-called ESG investments. What is ESG? And what is an ESG investment? So ESG stands for environmental and social governance. Essentially, what it means is that traditional investing, which was very much focused on looking at financial returns and financial returns only, has evolved to also incorporate the environmental and social impact and also the governance structures around the companies in which private capital invests. So that there's good governance, there's transparent governance, there's high quality reporting, so that as investors, we can kind of understand in a more coherent manner what the company is all about and what it's doing. So ESG is basically becoming mainstream. ESG is a term that probably you didn't hear that much, certainly not when I started my career in this industry. But now it's going to comprise about 1/3 of global institutional assets. And ESG investing can help bridge this gap, but it's also not so simple. Because, of course, first of all, financial institutions have to integrate ESG in a way which is not just greenwashing. It's not just saying we're doing ESG investing so that we can charge people higher fees and raise more assets than our competitors. We actually need to implement ESG in a way which is really meaningful. And we need to do that. Well, we at Robeco have been doing this for about 20 years now. So for us, our ESG as an investment manager comprises of a few different things. So we, first of all, will have a negative screening. So we won't essentially invest in various industries, say industries related to weapons or industries related to the worst kind of polluters, fossil fuels, etc. Then the second part of it is to create investment frameworks and use existing data as well as our in-house research and analysis to identify themes along which we want to invest, be it clean energy, be it smart transportation systems and what have you, and create funds around that. And then the third part is this kind of more of what we call a bottom-up approach to ESG integration. So it's using a team of analysts, of which we are over 20, including half a dozen PhDs who are experts in industry and sustainability, to tell the investors that you're investing in a company that has very strong management of its environmental externalities, or has very poor management of its environmental externalities, so that we can take those intangible, perhaps more qualitative risk factors into account and put capital to work in the right places. So that's basically what we're doing.
Thank you very much. I think I'm going to take a pause here and open up to the floor for any comments, any questions, and then we'll come back to our panelists for their final words. So over to you. If anyone has any comments, any questions, anything for our panelists, please, I guess, raise your hands. And I can see a question there. Can someone, and there's one here. So please introduce yourself and then.
Thank you. My name is Sagar Koirala. So I'm the regional focal point of UN Youth Group, UNMGCY for Asia Pacific region. So my question is with the ma'am from IMF. So we hear that Nepal is a climate vulnerable country, and a lot of green finance is coming. And I'm gonna stress out the issue of the carbon trade. So we recently had an agreement in 2021 regarding the carbon trade, and I think Nepal has a great potential, especially in the carbon trade. And especially, I'm from agriculture background, so I even talked with some farmers, and they told that they are shifting the agriculture and shifting to agroforestry because they see more potential in carbon trade. So how can youths like us be engaged in this carbon trade, and how is IMF and other agencies willing to help youths like us in the climate finance in mitigating through the carbon trade?
Thank you. I think we'll take a couple more questions, and then I think there was one here. Go ahead.
I'm Sharat Thuladar from NMB Bank, and after hearing the panelists, I would like to speak from a financial institutions perspective, and first of all, talking about environmental social governance. I think it should be, ESG should be way of doing business, and for that, business and private sector would need some incentives, or what do they get? How do we make it a win-win scenario for them? And the panelists had discussed that there is a gap of coordination between stakeholders, whether it's green financing or ESG management. So I would say whether it's the government, the regulators, the monitoring is required, the incentive probably they can provide, and what is the interest that we can create in private sector so that ESG would be way of doing business. So that's one. And second thing, when we talk about green financing, and when we look at it on a larger space or a larger landscape, then probably pricing would be one big factor that could contribute to green financing. And when we look at our local landscape, I think we cannot provide that kind of a pricing because of, in Nepal, I would say, impact investors are not there. I think the culture of having impact investors or long-term investors would always look for financial return. So how can we make green financing an effective way of doing business? I think then we need something to make green financing or the green financing funds to have some amount of pricing or long-term tenure that is available so that an impact can be created. So that is something I think is lacking. So whether it's the center bank that can support or whether it's investors that we can create within the country is one. And the second thing, if we look at international market, whether it's international DFIs or other international partners or funds or even green bonds from international market, I think since for international investors, Nepal would be a risk. The country doesn't have a rating and the country risk, and for Nepal to get international funding, and again, we'll be having hedging cost as well. So the cost of investment that is coming in from international front is also expensive as of now. And on top of that, probably we need to consider FX hedging cost as well. So having it as a competitive or intended financing. So on that landscape, I think the stakeholders need to look into it. How can we bring in funds? How can we probably project Nepal as a safe lending landscape? And then give an incentive on ESG, why ESG is important, why green financing is important. And when we talk about international funds, I think Nepal is one of the most vulnerable country, and we fall under top 10 most climate risk impacted country. And as of now, I think what we understand, climate fund, it's basically based on the proposals that are raised, and it is analyzed on the basis of proposals. So Nepal gets very little of climate-based funds. And again, when we talk about loss and damage fund, that again is not allocated according to region or countries. So how do we cater? How do we project ourselves as a country that we are the most vulnerable country and we should get our fair share of funding from these international reasonings? So that's probably a thought I have, and if the panelists could touch upon that.
Thank you. We'll take one more question, and I think then we'll turn to
well, I'm also from NMB Bank, Chief Investment Officer. And just adding on Sarat Bhai's question, just adding one more. Assuming that NMB commits $100 million worth of investment in climate finance, one of the key challenges that we faced is the pricing of the assets on the users front, or primarily the businesses who would be the off-takers of the funds. So to bridge the gap, so we've talked a lot about blended finance. How can we, or where can we approach so that we can, the commitments that we are taking, and for the display of the commitments, how do we get the access to the blended finance portion, which can somewhere or other subsidize the cost, so that the business is sustainable. It's not a grant or like a subsidy, but like some sort of subsidized capital. I'll not claim it cheap. No capital is ever cheap. So can there be a bridge? Can we create some access to those blended finance pools where we can somewhere or other bridge the cost so that the business are doable? And as banks, as categorically said, since 2015 Paris Protocol, we are the key financiers of like creating the ecosystem. So I think this is where, if done, we can in fact change the landscape. Please.
Thank you. So I'm going to turn to all three of you. We have, we have a question on carbon trading. We have essentially a question on how to make green financing more viable, more attractive, more commercial. So in no particular order, who would like to go first?
Since it's quite fresh, I think I'll talk about
Go ahead.
the question coming from the floor from NME Bank. Yes, blended finance is a way forward. A lot of the banks are getting subsidized DFI placements so that you can onward invest it. I don't know what the rate they're giving it to you, but at least you have that liquidity to onward invest it into certain green areas. Okay. Now that may solve your liquidity requirements, but it will not probably solve your risk profile of investing. But the way we have, as a private equity, the way we have approached our investments on these various SMEs is the blend. We have a blended finance construct where the dollar is we bring dollars in, we deploy Nepalese rupees, but the currency fluctuation is not harbored by our investee. They do not need to take the currency risk at all. That risk is taken over by the blended finance investor. Okay, number one. Number two, the technical assistance support that comes in is also from the blended finance. So you need to have, in economies like this, frontier economies like Nepal, in order to propagate, in order to develop the green financing, there has to be some sort of blended finance approach. In India, what they're doing is they're securitizing various invested products into packaging and then de-risking it and selling it off to investors to inside FDI. We can't do that because our capital market is not developed enough to do that. So in a plain vanilla situation, I think we need to propagate blended finance to de-risk the investments, get the ones who are willing to invest on commercial terms, get the ones who are willing to invest on impact grounds, and then join them together and then invest so that you'll be able to do it at a cost-efficient manner. But then you need patient capital. Debt is not going to do it. You need equities for this. Patient capital is something that will go for many years, longer duration. Asset liability mismatch is not there, but it is a much more expensive option than debt, number one. Number two, look, at the end of the day, we have to develop our bond market, and we need to bring green bonds into the country.
Yeah, I mean, there was several questions, but there was one that mentioned IMF explicitly. I will respond. I mean, it was about this carbon trading that is a very appealing idea. I would recommend you to read this report. I can give you later the reference, and apparently the South Asia accounts for 40% of the whole trading market of this carbon trading in the world. That is around $2 billion. It's very dynamic. However, it's attractive, but it's not a panacea that you just do it. Especially a country like Nepal could benefit eventually and should try. But it's very demanding, you know. So and that's what I try to make in my intervention in terms of that. Companies or countries will need to make an effort on data provision, being super transparent. Disclosure requirements are very strict. You have to have a contract between the two parties that are going to be that trading. There has to be a verification mechanism, and we have to trace back how this compensation is happening to make sure that this is really having an impact on emission. It's not only just something that is look good in the paper. So we have to be sure that all of these conditions are there before jumping into this carbon trading, but also could be an incentive for countries like Nepal to move in that direction on improving data, contracts enforcement, traceability of investment, and et cetera, and preparing for that situation.
Thank you. Rinchen, did you want to come in very briefly? I know we are now in the red zone, so.
Sure. I'll make a very brief comment. I think the panelists have also covered most of the questions. But I'll address the one on ESG and how one would make it an incentive, or why it should be an incentive and a way of doing business. And we believe that as investors, companies that manage all risks, including their environmental and social risks well, are companies that will perform better over the longer term. And so I think that is quite a consensus, or increasingly becoming a consensus among financiers globally, and therefore companies that have good ESG practices will be able to attract capital at better rates. And so that in itself is a very strong incentive, especially in countries where the cost of capital is high. So I'll leave it there.
Thank you. I think far be it from me to try and summarize what was a very interesting and also very technical discussion. But if I could, I would say that South Asia is clearly very important, both from a growth as well as a climate change perspective. What we are doing is clearly not enough. The government can't go it alone, and therefore I think the overriding message today is really to find ways to make this commercially viable, to make it attractive, to bring in private finance, and for all stakeholders, I think, to work together. That seems to be where we've come out today. So thank you very much to our panelists, and thank you very much to the audience who sat through what was a post-lunch session. Thank you.